So this video is about BigBear.ai, and the question is it a meme stock or is it a growth stock? Before we look at the charts, I do want to look at this article which may help to answer the question. So BigBear.ai has been a wildly volatile stock ever since it went public. The developer of enterprise AI software went public by merging with a SPAC back in 2021. However, like many other SPAC-backed tech companies, BigBear.ai failed to meet its own lofty growth estimates. Rising interest rates also crushed its valuation while casting a harsh light on its persistent losses and messy balance sheet. Now, even after the steep decline, BigBear.ai is still a popular stock on Reddit's Wall Street Bets subreddit. Now, what does the company do? They develop data mining and analytical tools that run on engaged networks. However, unlike other large mining platforms, it provides its services as smaller modules that can be plugged into its clients' existing networks. Unfortunately, it set the bar too high prior to its public debut and broadly missed its own forecasts. Now, BigBear.ai's numbers look dismal, but some contrarian investors believe it could even bounce back for three reasons. You have the CEO who's trying to stabilize the business, and then you also have insiders. They bought nearly 3 times as many shares as they sold over the past 3 months. Now, BigBear.ai is attracting some attention on Reddit, but wouldn't call it quite a meme stock because it does have a business that is stabilizing and its valuations are pretty low. Now, this is the monthly chart, and when you talk about valuations, price is currently trading at $1.57. Again, that's pretty high from its IPO of roughly $10. So you're looking at a sub 80% decline from the IPO price back in 2021. Now you can see price did form a monthly buy level at 80 cents back in January of last year. And although price came close to tipping its toes in the upper portion of the zone, it did form a trend line. And as you can see, price is currently respecting that uptrend line. And so from a macro standpoint, you have to remain bullish as long as price does not close below this upward monthly trend line. Going to the weekly chart, you can see how on the weekly chart you did have a candle close, but price now finds itself back above this trend line. Now you look at current pricing, you look to the left, whole lot of trading, which means that there's going to be choppiness, which means that there's a balance between buyers and sellers, which means that the best levels to get long is if we see closes below this trend line. The thesis, the narrative is going to be very bearish, only to potentially meet buyers that are waiting to fill their bag. Do want to point out to that extended range green candle we saw on the monthly chart. This is how it looks like on a weekly chart on very high volume. Now, if you are bullish, well, there's nothing stopping price from moving higher until we get to this $4 level. That's where you have some support / resistance. But to be sure, let's look at it on the daily chart. If you wanted to pick a short-term target, it would be this $2.30 level, right? Resistance, resistance, support. So we need some type of catalyst in order to see price move. Until then, price is probably just going to be range bound in the near term. Thanks for watching. Subscribe, please like the video.